The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Pattern that we're looking at. If we're looking at the SPX, that's the S&P 500 index, trading up 10 at 27.27. The 9-period moving average is right there, 27.35. It needs to climb above that quite sharply. It has to go to about the 27, I would even say 27.42 area to change the pattern of lower lows and lower highs that might be forming. And we'll see what happens there. The QQQs up 40 cents at 168.04, underperforming. This was the leading group going into the high of the 13th of March. Now we're going to see what happens because it needs to get to the 170 area. It's at 168.03. Support for all of these is the lows that were made just 2-3 days ago. Now what's going to be very interesting is the SMHs having a nice session here, trying to fill in the gap from 3 days ago. It's at 111.03, up 69. But here again, I want to see 113.60 area. And that's going to say, okay, that's going to be very good. The day is young. Anything can happen. I also wanted to be looking at the XLK. These are very important. We'll go to all the others in a moment. The XLK is just up 20 cents at 68.40. This is the S&P Select Tech Spider Fund. So what I wanted to say is that there's been a rotational correction going on for quite some time, since the January 26 high in the Dow and the S&P. They've underperformed, and what we've got, and this is really important, is we've got a sense, and I'm just going to go to it right here because we'll go to that following all these others. You see the way wood, which is the iShares Global and Timber Forestry, this is international. And it's making a new high as we speak, increasing this leg D. That is really important because the home builders, even though there was some good news this morning, the Philadelphia Housing Index, HGX, is really at the lower range, and it was up at the 369 level on the 26th week of the 26th of January. Plummets down to 311, is trading right now 327. So I'm watching this very closely because here we go. What we're looking at is that the 30-year, the white TYX, this is the one here, which made a peak C in the Chapman wave methodology at 32.21, is up a little at up 22 cents. It looks like it wants to go to that leg D for higher yields. So we're going to see how the Fed announcement is affecting the market. Why? Because the TNX is very close to 29.07 to the high that was made just 4 weeks ago, 5 weeks ago, of 29.43, just an eye blink away. And look at the screaming 5-year FVX, the cyan-colored one. In the weekly chart, it's in a new leg E. So this conglomeration of yields in parallel motion, having this cluster formation, suggests to me that regardless of what the Fed says, there's a chance that we're going to make higher, lower bond prices and higher yields over the coming few weeks. And I think that's going to impact the market. And as I said yesterday, I believe that there's a chance that we've already started one of those rotational, it's a correction has already been going on for weeks and weeks. Really what I want to say is that it's a form of select recession. And at select recession, you will see if the CTAS, which is Cintas, the overalls and uniform rentals, if it's able to make a peak D above 178.34, that's going to be good action and say, well, it's going to be very select in just certain areas where there's a slowdown. Other areas are doing very, very well. But if there's a failure from here, and Cintas trading 174.84, up 2.32, by Friday is underneath the low of 3 days ago, under 171.25. Let's say it's in the 170 to 169 area by Monday, this coming Monday. That's going to suggest to me a timeout is going to be unfolding in this particular area, which really is basically the economy. Reason why I wanted to put WOOD, that is the global timber and forestry ETF, together with HGX, which is the copper this is the continuous contract, is that copper went under yesterday underneath the left side of an arch formation. It is now trading a little bit above it. So the low that we're looking at of the 9th of February at 3.0465, we're trading right now at 3.058, but this morning made a low of 3.01. I've been saying that my target is the 200-period moving average. In the daily chart, we've taken that out. We've taken out the rising trend line support so far this week, but the week is not even half over. And we've got the monthly chart in a peak E sitting right on the 9-period exponential moving average. So I think copper is going to be telling us something as well about the economy. Now, this is going to be interesting. Why? Gold is already up $12 at $13.24. It is broken. I was doing a Larry show earlier. He's away for 2 days. I was showing this trend line. I said, if gold can go to 25s and hold there, but I would really like to see it hold it for 2 days or 3 days. So what the is, how it impacts yield, how it impacts gold, and how it impacts dollars per impact.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So what I want to do is to look at silver, because as I was saying when I was doing the Larry show, I said silver needs to be very strong. Silver needs to be trading at 16.46 right now. I think it was at 16.28 or something when we looked earlier. So this is a nice move, percentage up 1.73%, but it's lousy action because it keeps making these arches with a lower right side test. And then it bounces, and it's just done that again. And then it has a pretty decent green candle, only to give it all back. So if gold is going to be sustained to the upside, I have to see 17. It really needs to close. First of all, it needs to close above the 16.89 high of the 6th of March. But that's really just one. I would say there's one peak on the left side that is, yeah, that's good. But it's this one here. It needs to clear all the hurdles of the resistance, which is 17.01, the high of the 15th of February. If it does that, then it's cleared the 200 period yet again, the 200 period exponential moving average. This time, if it does it, I think it's going to be really positive. I'm not sure if it's going to do that. Now, I used to think there was a relationship of what the Fed did and said as it relates to the yields, as it relates then to gold and silver and the dollar. And I did some work on this, and it's a mixed result really, because all of them have been going down. So I don't get a correlation here, so I can't give it to you. Maybe other people have done that in a different way, but I'm unable to do that. What I can say is that there are a number of factors going on. So if anyone's seen the work that Dave White's done with his oscillator, the way it moves, the relationship of its characteristics for the different sectors, very important sectors, so many of those oscillators are now at their low point that I'd say to subscribers, you've got to be ready for a bounce. It's sustainability that's going to be very important. And that's the reason why I'm saying, just as I'm saying silver needs to already move into the 17s for me to say, hey, that is really good action. Now gold can sustain a move because it seems like you've got to have the two going together. The GDX right now is up 41 cents at 21.68. Yep, nice move. It's done this before. The MACD is good. The histogram is positive. Stochastic has made an improvement. The weekly chart is attempting to turn around. The MACD is just so wide between the distance between the slow and the fast moving averages. I think it's going to take a while to improve. But price-wise, here again, at 21.69, I need to see trading and holding in the 22.40s. I want to see it over the 6th of March's high, 22.25. Excuse me, 22.40s is really what you need to see. Any breakdown below 21, and that's a real problem. And with gold, any break below, I'm not sure how it's going to do that right now because it's got this wedge formation that's broken the upside of the wedge intraday. It hasn't closed above it, but the key support now for gold is still in the 1305 to 1303 level coming in the next few days. So that's very important. Now, let me just go to the TLT because I was asked about that. TLT is plummeting. Under the 9-period moving average, weekly is not looking good. I don't know what the Fed's going to say. But what I'm going to say is, unless the TLT, the iShares 20-year Treasury Bond ETF, is able to trade in the 120.25 area and hold there for 3 sessions and very quickly go to 121.50, it's at 118.66 right now. I think yields are the story, and I don't know how they're going to be able to fight against that. It's yields. So now what I would also like to say is, had a couple of questions. I haven't looked at crude oil. Yes, crude oil will be the last one on the agenda. Wow, what a big move. Leg D broke the resistance line. Yet another triangle with a break to the upside. This is very good action. and it's a leg B in the weekly chart, gray leg B, because it's under the previous high. But this is good, and it says the monthly is going to try to make a new high sooner rather than later. I wasn't thinking that, but we've got to go with the flow. 66.55 is really the high that it has to tackle to 67.48, the 200 period weekly chart resistance. This is I don't know what's doing it, but it's a great move. This goes together with wood, international, global, and timber forestry. This looks to me like, yep, maybe there's a lot of buying of crude oil because it's up very sharply, up 2.39%, and the technicals are improving. But it is a leg D. We'll see what happens and where it closes. I was asked about, hi Basil, hope all is well. I was wondering if you could look at FND on your show. It is in peak B, approaching leg C on monthly. It seems to be strong when compared to Home Depot and Lowe's. Any thoughts on the chart? Best, Jason. So Jason, good eye. I mean, I don't even remember seeing an FND. This is called Floor and Decor Holdings Inc., trading at 51.04, up $1.34, up 2.7%. What is this 2.7% today? Crude oil, and now we've got fund. This is FND, and yeah, very strong. It's way. It's over. It had gone over its last high of 51.48 back on the 22nd of Jan. Got a cup formation. I like it. I like it very much. Now, would I buy it right here at 51.05? No, I'd put it on my list. Jason, if you're long, all I'm going to say to you is absolutely correct. Everything, the daily, the weekly, and the monthly charts are all very positive. It should hold, any big pullback should hold between 48.25 and 46.80. That whole area should be strong support. So I like it, and all I can say is good eye. And it's an IPO going into a leg C, which says that it should still make a leg D. Let me put the A over here. And they made an all-time low in April when it came public of 29.37, and now it is over double the price. So this is excellent. Very good, and good eye. Next question I had was, there was a statement. Wrong mouse. This is the mouse. Another. There we go. So the question was, that is the which note? The 10-year. So have a look at this. This is the 10-year. I always find that this is it's almost like a waste of time what we're doing now, because what the Fed does is going to be the big issue. But in the meantime, back in the launch, I, of course, still want to do this because I want to give you the parameters that I'm looking for and why it's so important right now, right as we're doing this, to see a predisposition to move sharply higher in the Dow and the S&P. And the Qs are rounding, but not as strong. So this is what I'm looking at. You see this trend line, it's a Chapman wave technique called the falling axe. It just looks like a declining wedge or cone formation, expanding cone formation, going from a high of D, E, or F, pulling back, making slightly lower highs and much lower lows. And then it stops doing that, and then you get a higher low on the right side, so it gets a cup formation. I'll talk about that. This is one of the patterns we'll be looking at when I do my webinar on Tuesday, April the 3rd, 6 o'clock to 7:30 for subscribers. But you can check the front page of TFNN and see all about it. Peak D, it's called. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the TNX right now trading at 29.07. This is the 10-year yield. So there's a pattern that I call the falling X. That's where the lower highs and much lower lows. It just looks like an X with a pointing downwards or expanding cone. And then what happens is it forms some kind of a U-shaped formation. And that cup formation then takes out resistance, which is done today, the first downtrend resistance. But this is the second, actually. I discussed the whole thing yesterday about how I like to use trend lines. Now we're on the outer perimeter of the wicks, and we've gone above that, gapped above it. The day's young, anything can happen. MACD's turning up, stochastics looking much better at 51%. But what's the issue? The issue is that if it goes above 29.43, I have to first of all say it is an F because it didn't go below the A that started the whole thing. It's an F / and whatever the letter is in this case, maybe C. Then you say, oh, but wait a minute, if the MACD now fails to cross positive, you can get a double top. And that's really the way we go, step by step. And that could mean that the 30-year, and then look at the weekly chart as the same thing. And that'll be a leg E. If the MACD is still very strong. The technicals in the weekly and monthly are really strong. And it's suggesting, yes, that there should be, no matter what the Fed says, there should be a break of the 29.43 high. So let's just keep that in mind. So even if there's a pullback, at some point it looks to me like rates will go higher. So I just wanted to quickly do the TYX, and then more questions came in. TYX is in a far deeper consolidation. Here's that trend line. In fact, it looks more like a channel, like a down channel, right? So that has to at 31.28. First, it has to go to 31.60, about the 31.60s. That'll be A positive, but it needs to break decisively above 31.78, the high of the 9th of March, and then the high of 31.99. That's the 27th of February. And then finally, the high of 32.21 that was made on the 21st of February. So this has got a lot more work, but I think it will eventually do that. So I was looking at the FVX, dollar, FVX.X. And look at this. This is screaming higher. This has gone into A, B, C. This could be a C or a D. This is really strong daily. And the weekly has gone to an E. So the 5-year and the monthly is already over the resistance at the 200 period exponential moving average. Wow. That's all I can say. Wow. It's gone to an E before, back in the summer of 2014, in the 19s, and then pulled back very sharply to the 9s. So this is the first really big breakout in the monthly chart, and only in a leg C, about to bump into the 200 period exponential moving average resistance, which it avoided hitting back in 2006, 2007. Let me just show you something about. I'm going to be doing a webinar based on the Chapman wave, fourth highest peak, peak D. How important is it? Yes, you can go higher. You can go to an E and even an F, but D is where other things can happen. It's where it tells you, look, when it went to D in the monthly chart, it was way above with the doji candle. It only went 2 sideways months before it broke out. The MACD never went cross. It didn't even know that there was a pullback. Look how strong the MACD is. And the stochastic was still rallying way above 80% in the 93, 94% area. So this is a big deal, what's going on now. And how we pull back, if there is a pullback and the TLT rallies today, is going to be very important. So I hope I've covered those yields questions that I had. So now I did go to that FN, whatever it was, right? Short-term memory there, huh, mister? So, so let me just see. So fund is right here. Yes, okay. So we've done that, and I need to just write this down here. So I'll put Jason, always write these things down, FND at 51s. All right, now, most important thing, good questions coming in here. Question is, Bob, GE. So GE, which has just been hammered, trying to have a nice candle today at 13.82, but wow. It just doesn't look good. It's gone to a G/C, G/C in the weekly chart, only a B in the monthly chart. This is sad. I mean, poor old GE. You know, there are other things that are going on as well. So I'm not looking at GE as a buy, because even if there's a buy, there's just too much out there. I don't have the confidence on that monthly chart to say it started either a V-shaped recovery or lowercase h that has a successful test. There's nothing here that I can latch onto that gives credence to a buy signal at this particular point. Yeah, maybe if you want to nibble, you can nibble here at the 13s. Wow, I just stay away. Next question is Boeing. So is Boeing up today? Yeah, Boeing's up 3.54 at 341. So Boeing's had a really nice recovery from the 322.30 low of the 14th, having gone from 371, 50 points. Let me tell you, 50 points. Oh, man, what is that? It's about. So it was at 371, it goes down to 322, 37, 22. Yeah, so that's about, wow, it's about, what, 28% or something like that? That's a big move down. So trying to bounce, I'm just treating it as a bounce. I think Boeing needs a rest. That's what I think. I don't know if Boeing's heard me or not, but the chart says, yeah, it could bounce, maybe even get to the 345s, but there's a good chance it's just going to bounce, make another arch formation, and come and do a retest. That's my thinking there. Next question, Caterpillar. Caterpillar is, it's holding quite nicely. It's trying to rally, but I think it's just chop, chop, chop. There are so many sideways moves in these. This is a sideways consolidation. Let's just treat it as a sideways. Now, Goldman Sachs is going to be very interesting. It's up a full, it's trading at 263.29. It's up a whopping 10 cents. It's made that almost the one-to-one we were looking at. Let me get rid of this. It was just a demonstration of a technique. It almost fulfilled that technique to the penny. We don't need it anymore. the whole issue here is, I think that look, XLF trading up 10 cents is just in a holding pattern. It's saying we don't really know what's going to go on with the Fed in the next in the next hour and a half. But as it stands right now, the Goldman Sachs, the XLF, we are long. Bank of America also just kind of stuck up 9 cents. The whole issue here is that if the yields, there's a relationship of yields to the bank profits from everything I've read. I don't quite understand exactly how it works because it's really quite complicated. You've got to know the inner workings of the bank. And so far, the big move that we've seen lately has not impacted the bank stocks at all. The KRE, which is the regional S&P, is also acting very poorly. I'm going to put this into a package, and then over the break, I'll try to put it together in my mind.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, yeah, the question is, so what are you doing now? Well, we're still short the Dow from over a week ago, Monday ago. Short the NASDAQ from yesterday, Tuesday, a week ago. The semiconductors had a spectacular, we were short from Friday morning, had a spectacular move in the 3 times short position we had, where we got stopped out this morning. On second thoughts, I should have had split it into two pieces. I should have had the raise stop, which we got hit for a very nice profit, but I should have had that as the stop, and then had the call because we got in quite nicely. That I should have tried to keep that call position. You know what? You can always get in, even if the market reverses sharply. At the end of the day, there's time to get in. I want to keep things as tight as possible, have as much cash around as possible. There are going to be some fabulous buys coming up over the next few weeks. So, yeah, he has a good question. What about SLX? SLX is the steel ETF. Nice move up today, up 1.21 at 2.6%, 47.88. This is the Van Eck Vector Steel ETF. I think it's going to try for a bounce here. I would put the resistance right there. The resistance on the outside of the candle wicks, and that would say that 40, let's call it 49s. If we can get to the 49s over the next few days, then I think you're looking at X, which is up a little bit here, up 85 cents, maybe rallying some NUEs, Nucor. They all have pretty much the same patterns, except the Nucor has a high-level consolidation, so it's one of the strongest. And AKS is really what I was asked about. Morning, Basil. Could check out AKS today? The steels look good this morning. What do you think? Thanks, Greg. So, Greg, this is what I'm thinking. In this rotational aspect of the market, I think you're going to get really nice bounces in the different sectors. And because of it, I'm saying I would treat the steels only as counter trend for now. I think when they come back and they're spoken about in terms of tariffs and all, if it's deemed positive, they'll have a much bigger run. I would only treat them as trades. If you want to get into AKS at $4.94, an hour and a half before, an hour and a quarter before the Fed speaks, I would say that's a little risky. But if you're prepared to take that risk at $4.94, you could put in a 20-cent stop, and if it moves up, just raise your stop. And then I think around about 5:30, it starts the U-shaped pattern, the arch formation starts to pull back. Treat it as a trade. And if it keeps going up, that's fantastic. But think of it as a trade right now based on the weekly chart. Next question I had was, could I go through Boeing again? Yeah, so Boeing, the question for me would be, would I buy it or would I sell it? If I didn't know where it came from, that was back in a year and a half, 2 years ago. It was in the 130s. Now it's after hitting 371. It's in the 341 area. I would have said, if you are long in the last few days, that's fabulous. Because why? I would then say at 341, if it takes out this downtrend line and it's able, today's Wednesday. Thursday, between Thursday at 3 o'clock and Friday, 11 o'clock, if it's trading at 344 or higher, I think you've got yourself a great entry in Boeing for, I'm calling it a counter trend rally. And all you have to do is raise your stop. And what I would actually do is every time it moves, if it does, every time it moves 2 or 3 points higher, I'd raise my stop on portion. I'd proportion it out so that as it's, I'd still have some if it broke into the 348s, but I'd be whittling away because my thinking is it's going to give back in another arch formation over a period of a week or so. But if not, getting in over the last few days, you've got a nice cushion. And that's what I was saying. The point I was trying to make yesterday was, fortunately, we were short at almost the exact highs in the different indices. And that makes it really good. It gives you a comfortability factor so that you're not worrying about these sideways trading ranges because you're on the outside. That's the reason why I love to try to time these things so well. We went short one of the best of the cloud type stocks the other day. We wanted to buy it, but I said to get a feel for it, just buy a very small position on the long side, but we'll have a 1% or less stop. And we got it and it pulled back. And then today you just took out our stop and it's acting very well. I'm not playing games here, and I want to know what we want to buy, how they're acting when the market moves up and when the market moves down. But those are very small positions. But the positions that I think are going to be more intermediate term, I want to take bigger positions. I'm thinking it through as carefully as I can. I never thought through the SMHs, the short position we had carefully enough. I should have made sure that the entry point we had was a really good entry point. I should have kept that and said, hey, take us out. But at least on the shorter term, we would have taken a profit in some of that. So that I'm upset about. Okay, so another question came in. Oops, where did it go? So look at this. This is American Express. Look at the chart. Lousy chart. Makes a peak C, a major peak E in the daily, in the weekly chart. A peak G, unusual peak G, very unusual pattern back in the 16th of January at 102.99, and then it comes all the way down to the 87s, bounces to the 102 level, trading now at 95.36. Look at this pattern with the arch formation in the weekly after making a peak E, but only a C in the monthly. That's very bullish. However, look at Visa. Visa is up near the highs. It's already gone to a D in a V-shaped pattern. It's got a lot of resistance in the 124s to the 126 all-time high. Made a peak G at the all-time high, and a D in the day, in the monthly, but hasn't broken down. Very interesting. Look at MA, MasterCard. So they're all the American Express is different to Visa and MasterCard. MasterCard right now at 183 is up 55 cents. Hasn't taken out the high of 183.73 made on the 13th of March, but it's right within moments an eye blink away from its all-time high, and it's in an F/C in the monthly, and a leg E in the weekly, and a leg E in the monthly. So you've got very different. This is a spectacular looking stock, MasterCard. Holding is starting to arch over. It's starting to show that it's getting a little bit of resistance, and it could be making this pattern, but it hasn't done it yet. An arch formation, struggling to make new highs. Not a big deal, but big deal enough. So, a couple of quick questions I wanted to answer. The VIX index. So let's just make it as simple as possible. The VIX is at 17.06, down $1.14, down 6%. But it's on the 9-period moving average, and it's way above the 8s that it was back in 2017, those lows. So this is the longest on a weekly basis. Look at the weekly chart. This is the longest on a weekly basis that it's held above the 200-period exponential moving average. By the end of the day, will the VIX be under 16 and the Dow at 24,860 right now is in the 25s? We'll be back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
It's just bounced very strong. Yeah, 4.65 at 172.8. So this is going to be telling me a lot about what's going on. I still see Facebook. I still see, look, Google. I just see these as taking a well-earned break, a good consolidation. Amazon is a little different. It's a different beast altogether. It has made peak D. Now, I'm doing a whole webinar on my Ds. Let me see if I can get this right now. TFNN. Go to the front page of TFNN. Right here. Okay. So what I'm going to be doing is I'm going to be doing a webinar on the peak D, the fourth highest peak, why it's so, not coming up, why it's so important, and a bunch of things about it, because it could turn into, just a pit stop, a fuel stop for another move to the upside. But how often have we seen these Ds become significant pullbacks? Power of the fourth highest peak. Check out the front page of TFNN, and I'm going to be discussing what we're looking for, what we want to buy, how we're preparing for the summer, if there is going to be a summer rally. But I do believe this consolidation is going to last a little longer. So check out the front page of TFNN, get my service. You have to be a member, you have to be a subscriber to the opening call, and you'll get that service for a month for, with a money back refund. Now, look at this, Twitter, what does it do? It goes to a peak D. Bam, a peak D, and it pulls back from 36.80 on the 14th, trading down yesterday to 30.61, trading down 32.92. Daily, weekly, only a leg C in the monthly. So I wanted to explain why it's so important. Look at this. The Dow makes its peak D on the 26th of January at 26,616. And look what happened. Pulls back 12%. The QQQ makes its peak D on the last one, not this one. Yeah, on the 13th no, it was the one before. It made an E. Sorry, it just snuck a little higher and then pulls back 18%. The last one was a peak D on the 13th at 175.21. What does it mean? It's the fourth highest peak. Island reversal. Hey, 1 hour's down. We'll see what happens. Remember, keep it in mind. Up 80 or 90 down at about 3 o'clock. Minus. I'll be back tomorrow. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment News.